So good afternoon, everybody. Thank you for joining us today. We're running today's session to coincide with the release of our Q4 2021 reports. Those will be published imminently. For those of you on the call that are existing customers of StuRents and have accounts on the platform, you'll be made aware once those reports are published. For anybody else on the call, if you'd like to get in touch and understand more about our data services, do reach out. And you'll find our contact details at the end of this presentation. We're going to keep today's session relatively quick, so it'll be about 25-30 minutes, but there should be enough insights in today's session to keep it relevant and interesting. By way of a quick introduction, I appreciate there are a mix of existing customers on this call as well as new ones. So quick introduction to who we are before we get into the data. So StuRents is the UK's largest student accommodation ecosystem. We have three distinct arms to the business, so marketing, operations and data. Our marketing platform, StuRents.com, is the UK's largest student accommodation platform in the UK. We list well over 700,000 beds, and that's a mixture of both HMO accommodation and PBSA. Our operational system is being built in-house by our own team of software engineers, and that's being utilised by both HMO agents and PBSA operators. And then finally, data insights and research, which is obviously our focus for today's session. And here we are really uniquely positioned to leverage not only our marketing platform and obviously the insights that we collect via that system, but also data collected via our PMS as well. And that enables us to provide very granular data to our customers, some of which we'll touch on today. So starting off, what we're looking at on this particular slide is essentially demand over the last quarter, as well as the most recent data as well. And what we're focusing on here is essentially what students are looking for in terms of unit mix or bed size. And again, we've looked at this data for Q4, as well as the most recent data for the most recent cycle. So for Q4, which we classify as July to September, and that's really coinciding with the last quarter of the 2021-22 cycle. What we can see from figure 1 is how demand or searches on the platform have been distributed by size. So what we can see from that chart, if we focus on the grey bars in this particular case, is that demand was highly skewed towards smaller unit sizes. And we can quite clearly see there, studios and one beds were the most searched for size of property on the platform during that period. If we look at percentages, we can see that around 42% of searches performed were attributed to that size. And that is up compared to the previous quarter. So in Q3, we can see it was around about 32%. Now, obviously, that data is naturally skewed towards those smaller unit sizes, as we can see from the chart. But that really is in line with expectations. So typically what you would find, which we'll touch on in a moment as well, is that earlier on in the house hunting process, we would expect larger units to be more popular. And obviously as more internationals begin to house hunt, which is typically later in the cycle, you'll see that demand shift and studios and one beds become more popular, which again, we can see from figure 1. And really that is, as I said, coinciding with a greater proportion of internationals searching later in the cycle. Now, taking a look at the same data for Q1 of the 2022 season, which we are technically now in already, we can see that demand has very much been focused on larger clusters. So what that means is searches for either HMO accommodation or clusters within PBSA. And we can see that 4, 5 and 6 beds have been the most searched for size of property or cluster over the last, well, during October. As we mentioned, this is very much aligned with domestic house hunting. So domestic students will typically look for, again, larger sizes, which we can see from the charts, as they're looking to essentially live with a few of their friends, which they've met at university. In terms of year-on-year changes, we can see from figure 2 that it is broadly in line with the previous year. There is a slight change there. So in October 2020, we saw ever so slightly more demand or searches being performed for studios and one beds, as well as 2-bed properties. And that's partly going to be attributed to an overhang of international searching, particularly late in the cycle from last year. That data is also useful for operators. Obviously, having an understanding of how demand is distributed can be extremely important when considering marketing strategies, as an example. So as of today, really, if you are a HMO operator or a PBSA operator that has cluster style accommodation, you really need to have those that pricing released because quite clearly there is demand and searches being performed for that type of accommodation. So having an understanding of that can help obviously inform marketing strategies going forward. Moving on, what we're now doing is isolating demand for the various accommodation types. So we're going to start to look at the HMO market, and we'll come to PBSA shortly. And what we can see from figure 3 is a couple of insights. So if we look at the light blue bar, that shows the seasonality of the market for last year. And obviously last year runs from October to September, just gone. And what we can see from that is that obviously house hunting started in October, really picked up in November, as we would expect, somewhat trailed off in December around Christmas before increasing slightly again in January, then really falling away before a slight peak at the end of the season, which coincides with clearing. Now that light blue bar, which again highlights the seasonality of demand, is really what we would expect to see for the HMO market. And what we can conclude from that is that for the most part, the HMO market was largely unaffected by COVID. I think it's fair to say that most domestic students were very eager to move out of the parental home and get back to university and living with their friends. And obviously that's reflected in that seasonality chart. We'll see how that differs to the PBSA market shortly. In terms of underlying demand for the HMO markets, that's highlighted again in figure 3. And what we can see for the 2022 season is demand for HMOs has been very, very strong. So in October, we saw a 230% increase in inquiries for HMO accommodation on the platform. And that's a combination of factors. Again, that could somewhat be an overhang of last year, but equally, it's our belief that that's driven by strong domestic demand. And obviously domestic students are typically looking for HMO accommodation. And we can see that is reflected in the chart. Obviously in November, we saw an even large number of inquiries. And actually year to date, we're seeing a 42% increase so far. And obviously it's going to be very intriguing to see how that plays out for the rest of the season. In terms of what are students actually inquiring for in terms of price points, what we can see so far this season is that the average inquired price for a HMO property or bedroom is £129 or £130 to be around it, which is relatively high. And we'll see how that compares to the underlying rents shortly. In terms of which markets are performing particularly well, obviously it's still relatively early in the season, so we can't draw too many firm conclusions at this stage. But we've picked out some of the markets there that are showing strong year-on-year growth in inquiry numbers. So Liverpool, Exeter, Leeds, Durham and Manchester. So in somewhere like Liverpool, for example, so far this year, we've seen a 77% increase in inquiries for HMO accommodation. In Exeter, for a point of comparison, that's 53%, Leeds 50%, Durham 49%, and Manchester 35%. So those markets on face value are appearing very strong with regards to HMO demand. But again, we'll need to see how that plays out for the rest of the season. What is worth noting is obviously those locations have historically had strong domestic demand growth, and that obviously appears to be filtering down into underlying demand for accommodation. In terms of seasonality this year for the HMO market, we would expect it to be pretty much in line with what a normal or typical year would be. So again, following a similar trend to figure 3, in the sense that November is going to be extremely busy, then it will somewhat trail away comparatively for the rest of the year. Moving on to PBSA, and this really tells the story of the last 18 months with regards to the differences between HMOs and PBSA. So figure 5, which is something we've touched on before in previous sessions, is how COVID really impacted the seasonality of the PBSA sector last year. So we can see from figure 5, if we look at the blue bars, the market was very, very late. So operators of PBSA had a very nail-biting wait. and we can see that the majority of all inquiries for PBSA were very much skewed towards the back end of the season. So you can see clearly there, August and September were the busiest months, and relatively few inquiries taking place, particularly for the first half of the year. In terms of how that compares to this year, positively, we are seeing strong growth. So year to date, we're looking at about 200% increase in inquiries for PBSA. But again, difficult to draw too many conclusions from that, just because last year was such a low base that we would expect those increases on a percentage basis to be relatively high. So again, it's going to be very interesting to see how that demand for PBSA grows as we progress through the season. And in particular, when we start to compare that to years prior to COVID, I think that's going to draw or enable us to draw more meaningful conclusions. In terms of inquired prices for PBSA, again, relatively early in the letting cycle, particularly for PBSA, but we're looking at about £153 per person per week as the average inquired price so far. Obviously, that number will change and fluctuate as we go through the year. Typically, what we would find is actually that number will increase, particularly as more internationals start to inquire for their accommodation. In terms of the markets that are performing well, particularly for PBSA, again, relatively early in the season, so we can't say for certain just yet, but the locations that are standing out are Bristol, Durham, Exeter and Nottingham. All of those locations are showing good early signs of growth when it comes to demand for PBSA. Obviously, the latest news surrounding the variation of COVID does cause a little bit of concern. I suspect that probably will have an impact on demand. Some international students, again, may take a wait and see approach, particularly as it's a developing story. So again, that's something we'll be keeping a close eye on to see how that impacts demand going forward. Finally, on this slide, what we've also included is figure 6. And again, this is something we've covered in the previous session, but really starts to look at the difference in this case, demand by accommodation type, and in particular, the spread between the prices that have been inquired for, depending if it's a HMO or PBSA. So in somewhere like Bristol, what we can see there is the average inquired price for HMO accommodation versus PBSA, and that spread is particularly wide. So in Bristol, we're looking at about 35% at the moment. And remember, this is inquired prices, not advertised rents. Obviously, that's a clear difference. Whereas in somewhere like Nottingham, that spread is much, much tighter, around about 5%. Nottingham has been a very strong market, particularly for HMOs, and that spread is reflecting the fact that demand for HMOs in Nottingham is very strong, and that's reflected in the average inquired price, which is not too dissimilar to the average inquired price, so far at least, for PBSA. Moving on, staying on the question of demand, but this time going into price in a little bit more detail. What we are able to leverage is our data that's collected via our PMS, so our property management software, and that's reflected in figure 7. So what we're looking at here is executed tenancy agreements that are being executed via our system and the proportion of those for any given price bracket. So what we can see so far this season is that most tenancies are being executed around about 130 to 150 per person per week on average. Obviously, that data is going to be somewhat skewed to the HMO market because the HMO market is typically earlier than PBSA. But equally, we can see that some contracts are already being executed at relatively high price points. And what is interesting is when we start to compare that to the average advertised rents. So these prices are ex-London, and these numbers will evolve as additional pricing gets released and additional PBSA stock comes online. But if we take the HMO market, we're looking at an average advertised rent of around about £105 per person per week for the 2022 season. And what's interesting to note there is that is noticeably lower than these contracts that have been executed. And that does suggest that students are willing to pay a premium for the best quality HMOs in particular. And obviously that also reflects the fact that early house hunting enables students to capture the best properties, and obviously those are typically going to be at higher price points. If we compare that to the average PBSA, and again, this is something we've elaborated on in previous sessions, The average PBSA price is about £150 per person per week. What you can quite clearly see from that chart is that is touching on the area where you start to see a rapid decline in demand, at least for now, in terms of executed contracts, which is something we've discussed before. So in terms of headline spreads between the average advertised rents, we're looking at about 44% roughly, which is still pretty significant. What we could also compare this to is the average budgets that are being set on the platform, and that's reflected in figure 8. And what we can see is that historically we are seeing pretty strong year-on-year growth in budgets that are being set when students are house hunting. Obviously, the last couple of years have been impacted by COVID, so that growth has been less positive, albeit still positive. But so far, for October at least, for the 2022 season, we're seeing an average budget on the platform, so that's a budget that is being set by students when they're house hunting, of £138 per person per week. That broadly ties in line with the executed contracts above, but interestingly, again, is above the average HMO price, but below the average PBSA price. In terms of how that compares to previous years, so if we look back to October last year, for example, the average budget was £128. So year on year, we're looking at very strong budget growth of 7.8%, which is very positive. And again, that's going to be very interesting to see how that year on year growth changes as we go through the rest of the season. One other area that's worth very briefly touching on is obviously the current energy crisis. I think most on the call are going to be familiar with that. Obviously, that does have the potential to impact not just the student market, but also the broader residential sector as well. If we think back a couple of years, particularly for the HMO market, obviously a lot of agents were, for example, charging tenant fees. Obviously, legislation came in place that prevented that. So for operators of HMOs, that really restricted their ability to generate additional revenue streams. And that enables some operators, or force some operators, to move into providing all-inclusive contracts with the theory that allows them to generate additional income. Having said that, the issue currently is that with the rise in energy prices, operators need to have that risk adequately hedged. For operators that either do not have fixed utility contracts in place, or even those that do, but are perhaps with utility providers that, for example, may go bust, that provides potential to cause significant headaches. So for tenants that have, for example, entered into all-inclusive tenancy agreements, if the operator suddenly finds themselves exposed to much higher utility prices and costs, there is very little they can do in terms of passing that cost on to the tenant if it's baked into the underlying tenancy agreement. So that is something that is worth bearing in mind, and obviously it's going to be, again, very interesting to see how that plays out over the winter, to see if there are any casualties because of that. So that's something we are keeping a close eye on. Moving on to the pipeline and how that's developed over recent months. So in Q4, which again is the July to September period, we saw 6,700 new beds being put forward nationally, and we saw just over 7,000 beds approved in Q4 as well. Figure 9, we've highlighted a few kind of key locations there, and we can see how that pipeline has changed quarter on quarter. So in London, for example, the pipeline increased by about 2,400 beds. In Oxford is just over 1,400. Bristol, 1,100, and so on. So those locations, the pipeline has increased, but again, that will vary over time. In terms of key updates, we've just selected some of the largest applications that have either been submitted or approved in the last quarter. So I'll just comment on a few of those. So we can see Unite submitted a very large application in London. So that's actually on the Travis Perkins site. So that's for 843 beds. Similarly, an application was put forward by Summix, actually on behalf of Unite in Bristol. Again, a very large application there. So that's 595 beds, and that's going to be a mixture of studios and ensuite clusters containing between 5 and 10 beds. Other notable developments include one in Edinburgh, which we can see there, as well as a relatively large application in York. York has had comparatively few. So it's interesting to see some applications being submitted there. In terms of beds approved, by far the largest application that received planning permission in the last quarter was one that was put forward by the University of Exeter. So that's over 1,500 new beds. It's worth noting that project will actually result in the demolition of some existing stock. So that university is essentially upgrading their accommodation. In Manchester, we obviously saw 850 beds approved. So that's a scheme that is located in Great Marlborough Street, and that's actually on the existing car park. And in Leeds, we saw Olympian Homes receive planning for their very significant development. That's actually going to result, assuming it's delivered, in the tallest building in Leeds. So we're looking at 43 stories there, of 705 beds in total. And finally, Unite Again, who are relatively active in the last quarter, received planning for a 690 bed scheme in Derby Road. In terms of Nottingham, it now has the largest pipeline outside of London. So it has over 10,000 beds in the pipeline. And we can see from figure 10, you can quite clearly see the number of applications there. So that shows both the locality as well as the current status of applications and also the relative size. And quite clearly, you can see there are a significant number of developments in the pipeline. Obviously, a lot of those are focused around the city centre, which is where Nottingham Trent campus is located. In terms of growth potential, so whilst Nottingham has the largest pipeline in terms of number of beds, Bristol is actually ever so slightly larger, assuming all the beds in the pipeline get delivered, and that is unlikely. But if they are, then we're looking at supply growth in Bristol of around 37%, which is obviously significant. In terms of developments elsewhere, what is also worth noting is the general slowdown in planning, which we've continued to see. So in the first 9 months of this year, we're looking at about 19,000 beds put forward, which seems on paper quite significant, but if we compare that to previous years, is a definite slowdown. So in last year, again, for the same period or 9-month period, we were looking at about 25,000 beds put forward. If we go back a bit further, in 2017, first 9 months of that year, we saw 41,000 beds put forward. So whilst there are significant applications being submitted, it is definitely a slowdown compared to historical levels. A bit more detail surrounding the pipeline before we summarise for today. So what we can actually see from that planning activity, which I've just mentioned, is that the activity varies significantly per location, as one might expect. Early moving markets, which is something we've discussed before, so places like Newcastle and Cardiff, the planning application activity remains very, very limited. And we can see that in figure 11, where the number of beds being submitted really peaked in 2015. Obviously, as that market arguably became oversupplied with PBSA, the number of applications being put forward dramatically fell off. We're starting to see that trend also play out in places like Coventry and Sheffield. So in Coventry, which I think we're all pretty aware has been hit relatively hard due to COVID, we saw applications being submitted in excess of 6,000 beds in 2017, and that's really started to come off pretty quickly. And in 2021, so far at least, the number of beds being put forward has dried up significantly. If we compare that to somewhere like Nottingham, where the reverse is taking place, we can see that from the yellow or gold bars there, historically it's had a decent number of beds being put forward, but this year in particular, that number has increased, and we're looking at well over 4,000 beds there that have been put forward this year. In terms of a little bit more detail with regards to what that pipeline actually consists of, so nationally, the pipeline is still very much skewed to studios. So around 35% of all beds in the pipeline do consist of studio units. Around 13% are 6-bed en-suites and 11% 8-bed en-suites. What is interesting about those cluster sizes, if we refer back to the previous slides when we were looking at demand by bed size, 4, 5 and 6 beds were the most searched for size of cluster or HMO, which does not quite tie in with what the market is planning to deliver in terms of cluster sizes. So that's certainly something to note. But as always, there are significant differences between locations. So in Coventry, for example, that percentage is as high as almost 60%. In Nottingham, it's pretty significant as well, at 36%. Whereas if we look at somewhere like York as an example, actually the most abundant size in the pipeline is relatively large clusters. So in this case, 8-bed en suites. In terms of overall nationally and the pipeline where it currently stands, so we're currently looking at a national pipeline of around 102,000 beds. That's a combination of applications that have been approved or are awaiting planning permission. And if all of those beds are delivered, it would result in supply growth of around 14.5%. But as we've again discussed previously, and we've seen particularly with somewhere like Bristol and Nottingham, the growth potential per location does vary significantly. So that 14.5% on average needs to be taken somewhat with a pinch of salt, as it does vary significantly. So for today, just a very quick summary, what we've briefly touched on. So as we've seen so far this season, so for the 2022 season, clusters and HMOs are currently in very high demand. And we saw that 4, 5 and 6 beds are the most searched for size as of today. Early indications also suggest the HMO market is going to perform particularly strong this year. We saw from the inquiry growth year on year that it has been very strong, and we would expect that to continue. In the PBSA sector, it's a little bit early in the season for PBSA to draw too many conclusions. Normally the season really kicks off after the new year, but we are seeing some positive signs for some key markets, which we've touched on. Positively for the sector though, and obviously this is going to be skewed to HMOs at the moment, but we are seeing strong year-on-year growth in student search budgets. So that's something, again, that's going to be very intriguing to see how that develops once we start to get more international searching. In terms of planning, as we've touched on, activity, whilst substantial, is definitely lower compared to historical levels. And again, that's a trend we would not expect to change anytime soon. The pipeline, as we've mentioned, is primarily focused around studios. That does vary significantly per location. Another example is somewhere like Lincoln, where there are essentially no studios at all in that pipeline in that location, and that's something to be aware of. In terms of active markets, Nottingham remains very, very hot in terms of planning activity. So we're seeing a significant number of applications being submitted and approved in that city. We wouldn't expect all of those to be delivered, particularly with the current increases in construction costs, but there is the potential for a significant increase in supply in that location. And that is really in contrast to somewhere like Coventry, where we have seen a continued slowdown in the number of applications that are being put forward. In terms of markets that are not currently active, again, we've mentioned places like Cardiff and Newcastle. Those markets still very much remain somewhat out of favour with developers and investors, so we're not really seeing much activity there at all. What is worth noting, obviously, in places like Newcastle in particular, Durham is another one that springs to mind, we are continuing to see demand growth, yet currently there is very little in the way of planning application activity, so it'll be interesting to see if those markets continue to remain not very active, or whether we start to see investors and developers start to pick those locations up again. So that's it for today's session. So we're keeping it relatively short and quick. So appreciate everybody is busy. Hopefully that's still been very interesting for people. What I would suggest is that if you do have any questions, please do reach out. You can either contact me directly. My details are on screen at the moment, or you can contact the research team at research@StuRents.com. Similarly, if you'd like to book a demo of our data capabilities and to run through any of our data dashboards that we have, please do let me know. A couple of you have asked whether we're going to be sending a recording of this and the slides after the call, and the answer is yes. So we'll be distributing that in the coming days. But if you do have any questions, as I said, please do reach out. Thanks very much, everybody, and enjoy the rest of your day.